So it's our today's problem. So we're given in all information uh, from the following information. Prepared a balance sheet of Mumbai Limited as on 31st March 2019. So they have some information about the element of balance sheet, and we have to calculate this element from accounting ratio. So they're presenting first ratio, current ratio 2:1, liquid ratio 1.25:1, fixed asset to proprietorship 0.75:1, gearing ratios 5:1, working capital 8,000, reserve and surplus 2,000, bank overdraft 2,000, and long-term loan is nil. So from all of that information, we have to calculate the element of balance sheet. So at first, we will draw the balance sheet chart. So this is our balance sheet. I'd like to explain that. So here it is, the format of balance sheet. I think you know. The first one, equity and liability. We don't know the particular element of balance sheet, what would become here. So we should write down the headings only. The reserve and surplus, non-current liabilities, and then current liabilities. This is all the headings in the side of liability. We only know that these two, share capital and reserve and surplus, will come in every balance sheet. So we'll write down that share capital and reserve and surplus at first. So here it is, and we really don't know what element will come in this subheading. So so at first, whenever you are structure this balance sheet, then you don't need to write down the particular element in balance sheet, because of if they don't come in balance sheet, then you have to cut it out. So it's not favored for a required balance sheet. And then assets, come to the next point. Assets, you know, a non current asset. Number one, tangible assets. And number two, intangible asset. Intangible assets, and B, non-current investment. And then current asset. So now I'll calculate the element of balance sheet through the given information or ratios. So we'll collect this uh, function, this information whichever is given in question. So at first we'll collect that. This is working. Number one, sorry, workings and note number one, sorry. So at first information I get from question, current ratio 2:1, liquidity ratio 1.25:1, fixed asset to proprietorship ratio 1.75:1, gearing ratio 5:1. So there have another name of gearing ratio that's called preference share capital to equity share capital. So here it is, 5:1. Then working capital 8,000, reserve and surplus rupees 2,000, and bank overdraft long-term loan. This is all about information I have got from this question. So I think it's easy to collect all of your information from the question to your working note. So then you don't need to place always your question. So it's the right way. And now this solution begin. So there note 1, there is note 1. In note 1 we can get this information: current ratio 2:1. Current ratio means current asset by current liabilities. I think you know that. Current asset by current liabilities. And here it is the result of current ratio, that is 2:1. That's mean 2/1, and then we can multiply that, that is 2 into current liability equals to current asset. But there have another information, that is working capital is valued 8,000. So we know working capital means this is equation 1 here. Okay, so working capital means current asset minus current liability. I think you know that formula. And working capital, I get this information 8,000, and current asset means 2 CL means 2 current liability. We have got that information from equation 1. From equation 1. Okay, so 8,000 and 2 CL minus CL, that means 1 CL. So value of CL means current liabilities. Current liabilities valued 8,000. So we know working capital equals to current asset minus current liability, and working capital is 8,000. So current asset minus current liability means 8,000. So from this equation we can calculate the value of current asset. CA means current asset. So current asset 8,000, 16,000, okay. Now come to the note number 2, and their liquidity ratio. So this is note number 2. Liquidity ratio. Liquidity ratio means liquid asset by liquid liability. LA liquid asset means current asset minus stock. And liquid liability means current liability minus bank overdraft. Liquid liability means current liability. We have just calculated that current liability is value 8,000, and the value of bank overdraft is given in question. Bank overdraft is valuing 2,000. So liquid liability is just 6,000. So from that we can calculate the liquid asset. So liquid ratio in short form is LR, LA and LL. So liquid ratio valuing 1.25:1. That means 1.25 by 1. And liquid asset we don't know, we have to calculate. And liquid liability is valuing 6,000. So 6,000 into 1.25, and that is liquid asset. So liquid asset means 6,000 into 1.25, that is 7,500. So liquid asset valuing 7,500, and from that we can also calculate value of stock. Value of stock. So liquid asset equals to current asset minus stock. Current asset minus stock, and liquid asset valuing 7,500 and current asset valuing 60,000 we have calculated before. Here it is, current asset valuing 16,000 and there is stock, so we can get from that equation that is 16,000 minus 7,500, and that's 8,500. So here it is stock. So our next, fixed asset to proprietorship ratio. So this is note number 3. Fixed asset ratio so its formula is fixed asset by proprietorship fund. Fixed asset to proprietorship ratio, that's valuing 0.75:1. And fixed asset, we don't know, but there are another formula of proprietorship fund, that's called fixed asset plus working capital. I think you can get the formula from your note, whichever is sent by me in few days ago. So here the formula was given, and you can get that from the note. If you have already write down all the formulas, so if you are already knowing about that. So 0.75 fixed asset by fixed asset plus, we know the value of working capital valuing just rupees 8,000, and we can easily multiply that. That is 6,000, and this is fixed asset. So here it is 6,000 and fixed asset minus 0.75 fixed asset. So from that we can calculate the value of fixed asset. So 0.25. I think they don't have any I think they don't need to explain to however we have calculated in this process. I think you know already that this is how I am calculating this value of fixed asset, and this is 6,000 divided by 0.25 and is valuing 24,000, and the proprietor's fund is fixed asset plus working capital. So we already know the value of fixed asset, that is 24,000, and the value of working capital is 8,000. So 24,000 plus 8,000, that is 32,000. Okay, so next then comes to the next point. This is note number 4. Gearing ratio 5:1. I think you know the value of the another name of gearing ratio. I have already explained before. Gearing ratio. They have another name that's called preferential capital to equity share capital. So I've told you before, whenever the blessing formula is written just like that, preference share capital to equity share capital, then you have to assume that this is the correct assume ever I have seen in accounting ratios. So this is preference share capital to equity share capital, then whichever is written before the word 2, it will go in the up. This is the denominator, pref share capital by equity share capital. So the value of gearing ratio is given 5:1, that's mean 5/1, and pref share, and this is just like that, pref share capital equity share capital. So we can multiply that 5 into equity share capital equals to pref share capital. And we already know the value of proprietorship fund. Proprietorship fund is valuing 32,000, and we know the real meaning of, and they have another formula of proprietorship fund, that is share capital plus reserve and surplus. This all formula is given in the note, whichever is sent before. You I think you already know about that if you write down the note. So we can get the value of reserve and surplus from the information which is given. This is value of reserve and surplus valuing rupees 2000, and we already, and their share capital we can get, plus reserve means just 2000, and sum of share capital and reserve and surplus got the value of 32,000, and the value of share capital is just 32,000 minus 2,000, that is 30,000. This is the value of share capital, 32,000. I think you already know the what does it mean. Does it means share capital? Share capital is valuing 30,000. We have just calculated, that is. And share capitals mean there are two kind of share capital in company. This is equity share capital. EQ means the equity. This is the short form of equity. Equity share capital plus pref share capital. Equals to 30,000. And equity share capitals means five into equity share capital equals to pref share capital. Pref share capital means 5 into equity share capital. So we have to note down equity share capital plus 5 into pref share capital. That is valuing just 30,000, and we have got that from equation 2. So that is 6 equity share capital it is 30,000, and the value of equity share capital is just 30,000 divided by 6 and 5,000. If there are any confusion how to valuing the equity share capital, so there are any confusion, so just call me or text me. I'll reply. So here the value of equity share capital is 5,000, and we can also know the answer of pref share capital is just 30,000 minus 5,000, because both of sum of this equity share capital plus pref share capital, that is valuing 30,000. So if equity share capital valuing 5,000, so here it is, we have calculated. So the pref share value is just 25,000. Okay, and then comes to note 5. Here comes the note 5. I think there are 4. So note 4 is the final note, because after that we don't have to calculate something more, because there have nothing more information about the elements. So it is the final note. So now we'll put the value and the element of balance sheet. So at first, share capital. So we know the value of share capital, that is just calculated. Share capital we have got that from note 4. So here I'll write that is note 4, and the value of share capital is just 30,000. Reserve and surplus, this is already given in the information in the question. This is valuing just rupees 2,000. So just sorry, I have wrongly I have write down the ALF, laser full of so there have a bad habit of me to write down laser follow in place of note of balance sheet. So this is valuing just 2,000. And non-current liabilities, there are any non-current liabilities, that is long-term loan, but just nil. Long-term loan, actually why am I writing that? Because they're already given that is valuing nil. Such an idiot I am. So we can get from the information bank overdraft, that is just 2,000. I am remembering, if I am not wrong, yeah, this is 2,000. And we don't know the other current, we don't really, sorry, I think I've done anything wrong. So here it is, the other current liabilities and bank overdraft. So bank overdraft is already given in the question, that is valuing just rupees 2,000. So I think we should write down. And we know the value of current liabilities is valuing 8,000. So it is 8,000, and there have already a value of bank overdraft including rupees 2,000. So we can get other current liabilities, 8,000 minus 2,000, that is 6,000. Okay, just ignore this cut down figure. There have a misunderstanding of me, so just ignore. So here it is valuing 68,000, 10,000 and 40,000. The value of total liability is 40,000. So there have also the value of current liability is 40,000. And we have already calculated the value of tangible asset, that's in fixed asset. Fixed asset is valuing 24,000, and it is under note number 3, that is 24,000. And intangible asset, there have no intangible asset, so there have no non-current investment, and there have only current asset. So current asset is valuing current asset is valuing 16,000. Current asset is valuing 16,000, but we have calculated stock, the value of stock. So here it is, the stock, value of stock valuing 8,000. Here it is, value of stock 8,000, sorry, 8,500. What the hell I am doing today? So stock 8,500. So we don't know other specific current assets, so there we should write other current asset, and that is 16,000 minus 8,500. and that is 7,500. So 24,000, 8,500 and 7,500, that means 40,000. This is the total asset, and both of them, asset and liability, get tally. So it's all over the problem. If there are any confusion, doubts, then ask me. Okay, bye.